Borrowers can now breathe easy as Equity Bank backs a banking trend of announcing higher interest rates. The bank says it will not affect the planned increase in interest rates from 17 to 24% that was to take place from Thursday this week. In an exclusive interview with KTN's Abi Agina, the bank's group chief executive James Mwangi said market fundamentals, among them the falling treasury bill rates, had pushed them to make that decision.
Do you feel that a high interest rate regime would spark off a downward trend when it comes to the uptake of loans? And what does this do to an economy like Kenya, which we are seeing a number of SMEs accessing credit and they are able to grow their businesses? What do you make of this?
The reason why we have jumped into these lower interest rates and withdrawal was because of the risk of high interest rates. High interest rates discourage borrowing, and we felt that there were no underlying factors that would cause a country to throw credit to the private sector at a time that the international community is investing in a country. The second one, of course, is the concern of inability, and the proposed rates that we had been forced to give would have increased significantly the strain of repayment, which eventually results into higher default rates. So we are very excited the government acted promptly to stem off the headwinds that were emerging in interest rates. When we proposed to increase the interest rates in October, we based this on the increase in interest rate on treasury bills. We said treasury bills were competing with our depositors, and they had incentivized depositors to seek 22% as a rate of return on their deposit. Unless it's absolutely necessary, we should always keep the same rates stable so that repayment is based on what customers have predicted when they were borrowing or from the analysis. So it is this government reaction that we have responded for, because we don't want to be left out with high interest rates at 24 comparing with the treasury bills at 17.
But the fact that you are set to increase the interest rates, how would this have impacted on consumers, bearing in mind that credit access has been growing in Africa as well as in Kenya, really?
We now anticipate that what we could have lost in terms of deal pipe is now going to flow in, and we expect to see sustained growth rate like was there before the proposed interest increase. We are projecting that the government will continue to lower the interest rates. We are very optimistic that hopefully the 5-year board that the government has announced will be raising, will create a better yield curve that is comparable to the lending rate.
Thank you, sir.
You're most welcome. Thank you very much.
Appreciate the conversation.
Yeah.